Good morning, and welcome to the Monday Morning Market Recap, brought to you by Island Park Private Wealth. Well, snow again got us here in Charleston, South Carolina. We received a whole inch of snow on Saturday night, and that caused a little chaos. We had bridges closed, some of the roadways were closed, there was a run on grocery stores, and yes, even school got canceled today, even though most of the snow is gone. We have received some unusually cold weather here the past couple of weeks. And this weekend was no exception. And I know most of the country has been receiving a lot of cold weather. So we hope wherever you're listening this morning that you're safe, that you're warm, and that you had a relaxing weekend. So we're going to jump into the Monday Morning Market Recap. As normal, we're going to give you a little brief overcap or review of the market last week and some of our key takeaways that we continue to monitor for you all here at Island Park Private Wealth. So markets were mixed this past week as the rotation away from the mega cap stocks paused. The S&P 500 traded higher earlier in the week, briefly crossing the 7,000 level for the first time before a late week pullback left it flat. The NASDAQ outperformed as technology stocks advanced, while the Russell 2000 declined as small cap momentum stalled. Growth stocks and the momentum factor outperformed, while value and the equal-weighted S&P 500 lagged. Energy was the top-performing sector as oil rose to a 5-month high, while defensive sectors underperformed, led by healthcare. In the bond market, Treasury bonds produced modest gains as interest rates drifted lower, while corporate bonds traded lower as credit spreads widened. A weaker U.S. dollar boosted international stocks and commodity prices, with oil, gold, copper, and silver prices all surging. Our key takeaways from that price action? Well, 1, the Fed held interest rates steady. The Federal Reserve kept interest rates unchanged this week, holding the Fed funds rate in the target of 3.5% to 3.75%. A decision widely expected by the markets. Now, the decision wasn't unanimous, with 2 officials favoring a cut, but the overall message signaled a wait-and-see approach as policymakers assess the impact of last year's 3 rate cuts. The Fed's policy statement struck as a slightly more optimistic tone, describing economic growth as solid and removing language that previously highlighted unemployment risk. The next cut isn't expected until June. The Fed's decision and Chairman Powell's press conference reinforced that policymakers are in no hurry to cut rates further. Recent economic data has stabilized, and while inflation has eased from its pandemic highs, it remains above the Fed's 2% target. Point 2, AI leaders deliver strong results. Microsoft and Meta reported better than expected earnings this past week, but their stock reactions highlight a growing divide in how investors view AI CapEx. Microsoft reported strong demand for artificial intelligence across its cloud and software products, but the stock traded lower as investors focused on slowing cloud growth. While AI demand is real, the rapid rise in spending to build AI capacity is weighing on profit margins. Microsoft's results contributed to a broader stock market sell-off on Thursday as investors questioned the potential return on investment. Meta's results told a different story. The company's AI investments are already improving ad targeting and engagement, driving strong revenue growth that justifies rapidly rising costs. The stock traded higher given the clearer link between its AI spending and current profits. Investors are shifting their focus from AI spending to visual monetization. Companies that can turn AI CapEx into revenue are favored over those still in the build-out phase. Point 3. Consumer sentiment remains weak. Consumer confidence fell sharply in January, raising concerns about household spending, a key driver of the U.S. economy. The Conference Board's Consumer Confidence Index fell to 84.5, the lowest reading since 2014. The decline was broad-based, with all parts of the survey weakening as consumers became more concerned about current conditions and the months ahead. The Expectations Index, which tracks the outlook for income and jobs, fell to 65.1. Survey responses point to worries about a soft labor market, rising prices for essentials like food and energy, and uncertainty around tariffs and trade policy. Consumer spending has remained strong in recent years, but the sharp drop in confidence raises the risk that households may pull back, which could slow the broader economy. And our last point for this week is home prices stabilize. Home prices rose for a fourth consecutive month after falling for 5 straight months in mid-2025. The rise is being attributed to continued supply-demand imbalance. Higher mortgage rates have kept many buyers on the sidelines, while many homeowners are locked into low mortgage rates and choosing not to sell. This limits the supply of homes for sale and supports prices. So higher rates are weighing on buyer activity, but tight inventory is acting as a buffer against falling prices. So those are our key takeaways for the week, and that's the Monday Morning Market Recap, brought to you by Island Park Private Wealth. If you enjoyed what you heard, if you found it informative, please hit the subscribe button. And again, tell your colleagues, tell your family, tell your friends, so they can subscribe as well. Thank you, and have a great week, everyone.